Hey, traders, welcome to Charts and Coffee, Non-Farm Payroll Friday edition. Great to see everyone. I'm sure everyone is already pre-caffeinated, have their positions in, and are waiting for the volatility to basically serve the trade. That's what it's always about for me. I'm not looking to play the volatility. I'm looking to either take advantage of trend, and maybe that volatility is what carries the market to a target. Maybe it's what carries the market down to up to or down to an entry, right? But I don't want to place a trade that's sort of a binary guess on the direction. That includes non-farm payroll, that includes earnings. I'm not looking to just play that spike. We're looking to play a slightly larger picture. So hopefully everyone is doing great. All right, there we go. Got all the comments up and questions already coming through. Awesome. So, well, you know what? I know everyone's been looking at that calendar, right? Whether you look at Forex Factory, whether you use Trading Economics, which is another great one. I know you're looking at that calendar. I know you know that we're dealing with average hourly earnings. That's got to be just a kick in the pants to the Federal Reserve. If you're wondering, Rog, what's the takeaway here? What non-farm came in at 678. We expected 407. The previous was 481. What is the takeaway? Is that downtick in unemployment rate? And what does that mean to the direction of the indices? This is the way I perceive it, gang. This is the way we're going to look at it. This basically green lights the Federal Reserve clearly to hike a quarter point in March. That's going to happen, right? So the conversation about hold or a half point, that's always been, for the most part, noise. What's interesting is May, we get the quarter point in March. We get likely another quarter point in May. Then we get another quarter point potentially in June. And even now in July, we're starting to see possibly, we're still very low on the whether we hold column or whether we hike. But that fourth hike is right now priced in at over 50%. So we got a 50-50 shot at a fourth hike for sequential meetings, right? So keep that in mind, because that is where the game is at. It's not whether we're going to hike or not in March. That is not the question. It's how many hikes now throughout 2022 does the Federal Reserve have the ability to do based on the data, right? Where does the data map out in terms of their actions? Yeah. Okay. So with that being said, I got a couple notes here that I'm sharing with you all. This is a look at what I share with members, whether that be my futures room sessions, whether that be my sector secrets mastery. Again, reminder, we've got that webinar on Wednesday, 8 p.m., simplertrading.com/ I love this URL, timeless. Grab the indicators from over at countdowntrader.com so you have the things that I'll be talking about. Or if you're in one of our rooms, if you're a member, awesome. Go into the room drive. It's in, I believe, the training room, day trading room, options room, and futures room. Of course, it's in my mastery as well, but go grab that layout. So now you've got the indicators that I'm going to be talking about, how I've been using, how we've been trading, and that should make for a much better set of questions and conversations. So really looking forward to that. Okay, so let's get to the questions. That is, after all, what this show is about. So let's jump into it. And kicking it off with Tim. How are you? Am I still looking at the 10-year, right? Whether we're looking at ZN or IEF, am I still looking at that for a short? I am. I'm bearish, right? So before a short entry is going to come, what is my sentiment? What is my expectation for direction? I am absolutely bearish. I don't have a setup at the moment. So we've taken this before. Then the market basically lost its mind on the first, and it seems to have basically transitioned from a downtrend into chop. This is a bearish neutral market where we'll likely be looking to fade. Use the Darvis right in here. we'll be likely looking to fade that level right in there. So I'm holding off on it right now. Tim, I've got a pretty active book right now in terms of long a handful of staples, long energy, oil stocks, short a number of corners of tech. We just added Intel and Cisco to the not Cisco, Intel and Comcast to the trades yesterday in the mastery. So that's where my focus is right now. And this not being a trend any longer ends up moving down a few notches in terms of my watch list. I hope that makes sense. All right, next question. And thanks for the question, Tim. Good morning, Raghee. Do I know of a good liquid ETF for, no, I mean, soil used to be one of them. I know everyone's talking about fertilizer. Uh, Fertilizer is on a conversation around Ukraine, although it seems to have really kicked up. I really have no interest in fertilizer at all. It's thin, it's tricky. I don't have to pick the right boat within the tide. What's working better? Now, again, I find fertilizer sort of a fringe setup, when in reality, what's been working? What have we been talking about right here in Charts and Coffee? Get long corn, get long beans, get long Archer Daniel Midland. This has all been free content, free ideas that we've been putting out since middle to end of January. So no, I really don't, JMO, because I don't have any interest in that corner of the market. There are far better, for me, there are far better trends that I've been trying to capitalize on. So maybe someone will have a good, what is it? You asked about UREA. Yeah, I have JMO. I'll tell you the straight up truth. I have no idea. It's just not on my radar. So it's just really been the likes of corn and beans. Notice I'm not saying wheat. Right? Notice I'm not saying wheat. Wheat is a Ukraine narrative. Wheat is going to be tricky once this geopolitical situation simmers down. Stick with the trends that preceded. They were surfing inflation, not geopolitical issues. So I'll say the same stuff that I was saying before Ukraine, right? And that, so for that reason, my friend, I don't have a setup. All right. Thank you for the question, though. And I think it's important for someone on this side of the mic to say, I don't know. That's not just been where my focus has been at. I think there are other better trades that preceded the current acceleration, right? So keep an eye on those. All right. And I know a lot of you are in those trades already, which makes me so happy. What about the Russell? The Russell was a setup that we've been talking about for some time. It's following through today. Russell, we talked about short side. Qs, we talked about short side. So today we're following through. Terrific. Unless we get back up to about 2070, 2075 on Russell, the train has left the station. So if you're short, awesome. Enduro Mom, that's what we've been doing. On the moves higher into resistance. That is our pitch, right? That's what I want to swing at. When it's moving down, when it's moving away from my zone, that's akin to a batter reaching for the pitch. And I don't know if you can see it, probably not, but I've got a bat. Hang on. I don't know if you can see this. Yeah, right there. I've got a bat on my bookshelf there because it does remind me, Rog, wait for your pitch. It might be someone else's pitch, but it's not mine. And that's another thing too. If I say something is not working for me, it's just not my pitch. And I think that as traders, we're a lot like batters. We need to know what we connect with a high percentage. Yeah. All right. Next up, CCI has rallied the past 4 days. Thoughts? Good for folks that are long, I guess, but this is a short to me. Yeah. Mark. Yeah. I guess if people were looking, in it and their momentum trading, cool, but I would look at this as a short. All right. I would look at this as a short. Next up, can we take a look at gold and or 6E? Yeah, of course. All right. So taking a look at gold, moving higher in a trend, dips can be bought. I mean, it's just really that simple. Buy the dips in gold. 6E, I have nothing to say about 6E. If you've been following the free videos, I'm not talking about setups that I put in the premium part of the futures room or that I talk to my Sector Secrets Mastery folks about. I'm talking about things we talked about in Charts and Coffee, free videos. We have been talking about this 115, my trade for the euro. And many of you started back on February 10. So this is what exhaustion trading is all about. If you want to be a momentum trader, I guess Euro's been good. But I find where the resistance is. Thank you, Darvis. I believe we had a over uh, bought slow stow around that area as well. 115 handle, and this is now five, almost closing in on 400 and change, 500 ticks. This has been a great trade. It's in line with the macroeconomic, right? What is this a play on? Long dollar, isn't it? Is short euro the same as long dollar? 100%. So the way that I've chosen to buy dollars is not through the dollar index, which is diluted with a lot of other currency. We went right for the most steady and best negative correlation in the markets, and that is short euro. Short euro is, in fact, long dollar. Thanks for the symbols. Thanks for the question, Jimmy. All right, moving on. XLK. So XLK, I'll tell you, Tom, it's actually the one sector within the NASDAQ that I have not been engaging. The reason for that, the culprit, is Apple. Apple is not settling down in a way that tells me that that massive vote in this tide known as XLK is cooperating with shorts that I want. Now, I think this test of the 200, I think that's really, really great. I think we're going to see movement lower. We're short NASDAQ, right? We're also short many consumer discretionary individual stocks as a proxy for being short XLY. And then a lot of traders have been looking at also proxies for XLC. So I like XLK for a short, right up against the 200 for, so how long was this at the level that we could short? It looks like it hit it on, and this is really important, gang. Where it is today is not a setup. It's follow through, right? Where was the setup? Ideally yesterday when we tagged that 200, right? Moving lower now, that's what everybody does. It's moving lower, let's get short. That's momentum trading. That's not exhaustion trading. So when you think about how am I processing the market, there's no right or wrong here, gang, at all. But if you ever feel, okay, Rod, but what do I do today? Pat yourself on the back, hit the confetti falling from the ceiling machine. I'm kidding. I don't have that. I wish I did. But what we want to take advantage of is, A, do we believe that there is a path of least resistance? And in the case of XLK, I do believe it's down. Next, all right, B, where is the resistance that I feel is exhaustive? That's exhaustion trading. And that's, primarily what I do. So XLK, beautiful setup to the downside. Tom and I suspect we'll see some really great follow through today, which is, really what we've been waiting for. Trades 21, same story. QQQ for my futures traders was a short off that bottom line of the wave yesterday, and then off the bottom line of the wave right there, 21 exponential yesterday. Today, there's no trade for me. I will not engage the NAS to the downside as it's moving lower. We took advantage, same conversation that we just had with XLK. And I think for a lot of traders, it's an unusual approach because most traders are momentum traders. Not right, not wrong, but a lot of folks got long. A lot of folks are bullish because we started bouncing. That's a near-term look, right, at a bigger picture downtrend. So I think a lot of traders, right, what if you looked at this? What if this was your only view? A lot of traders, they don't trade like this. They don't look at only 8 or 9 candles, right? But a lot of traders mentally look at the market like this. Oh, it's getting ready to move higher, right? I'd probably think that too if this is all I was looking at. Now, let's add some market memory. Now let's put that in context. Do you see the difference? That bounce was a pitch right into our short this zone, right? So that's what we took advantage of. 21 exponential, bottom line of the wave, all those free tools that are available at countdowntrader.com. And then I'll be talking about how I have been using on our webinar on Wednesday. Really looking forward to it. So if you're wondering, yeah, Rog, how did you do that? You're waking up to a pretty darn good morning, even though we bounced a little bit. Yeah, because you look at the trend and then you look at the movement within the context of the trend. And I think within the context of the trend is where the wheels fall off the wagon for most traders. They see a bounce and figure the market's going to keep moving higher. By the way, it might, but not before it makes a little dip first. This is what we're looking to take advantage of, the path of least resistance. And by the way, in the NASDAQ, it isn't up, right? The path of least resistance is still very much down. All right, moving on to our next question is a couple other questions on the euro. Same thing, gang. We've been talking about this euro since 115. So this is just monstrous technical setup, macroeconomic follow through, right? Remember, most symbols end up on people's radars once they get moving. That's not what we want to do, right? What we want to do is ask ourselves, why am I looking at the euro? Macroeconomically, the dollar should be moving higher. I say macroeconomically because we're in a tightening cycle. Tightening cycles benefit the currency of the central bank, who's basically managing the value of that currency. Long dollar is short euro, 115. I mean, that's what we've been doing. So this now, there's no trade for me now. This was all the macroeconomic work, all the Darvis insight, and two specific sessions, the 4th of February and the 10th of February, where we hit that zone. The alert goes off. Well, so, in the futures room, what happens? Well, you either have a limit order, a good till cancel limit order, or you have an alert to let you know, hey, we're gaining some proximity to that level that you want to short. However you do it, if you want to buy puts, for me, I've got the 6E and I've got a Euro US Forex trade, right? And then FXE is tricky. I do like FXE, but FXE is tricky in that currencies move nearly 24 hours. This futures contract is, again, 22 plus hours. FXE is 9:30 to 4. So your access to the idea is a little bit more limited, but nonetheless, that's it, right? So this is not really where the story is. Does that make sense, gang? This is where everyone's going to talk about it. But by the time everyone's talking about something, just presume the trade is either parabolic or likely the best part of it is done. I don't say that to disappoint anybody. I say that to remember that getting long crude wasn't a Ukraine narrative. Getting long crude was an uptrend that's been valid since the second week of this year, right? So I want you all to get in on those macroeconomic trends. And you're not going to be able to do that if you're listening to bozos talking about macro by way of headlines. If someone's basing a trade on Ukraine, run, unless you understand the context of momentum-based geopolitical trading. I don't even do that. It's very risky. It's very volatile. And I don't even do that. So that's where I say, yesterday, Trish and I were here in the office doing some blog updates or countdown trader updates. And this is not in any way to dismiss what's happening geopolitically in the Ukraine. But as a trader and investor, we can't indulge in the shiny volatility of a geopolitical. It's very dangerous. You don't want to indulge in that. So my thinking every morning is, Rog, what's Ukraine got to do with it? Nothing. You always think of the folks over there that are, I can't even imagine what it's like over there right now. But as a trader, that is not even part of the conversation. Inflation, what is the Federal Reserve going to do? All right. That's where our trades are happening, gang. So I hope that makes sense. All right. So next up is XLI. Oh, gosh, Robert, great one. We haven't talked about XLI in a while. Choppy, retesting that 200. I would try to find a relative outperformer within XLI. So what I would say, Robert, is look at the top weighted stocks within this, because XLI is actually not that liquid from an options chain perspective, an ETF. But the individual stocks within them, many of them are beautiful, liquid stocks. So I would try to find a relative outperformer to the downside. Is there a double red in there? That's going to be your setup. And Gene, I'll say the same thing when it comes to Pfizer. Do you like the double red in Pfizer? We're battling it out with the 200 right now, which could be a very cool level. So I think you're looking at this at a very great timing in terms of what we could see. The question is, does XLV want to roll over or does it want to move higher? Because Pfizer is part of that tide. So if it is a double red and if it can hold resistance of the 200 and stay below it, we're in good shape. I'm slightly more opportunistic to the upside, which is why BMY and AbbVie, ABBV, have been more on the radar. So I'm a little bit more bullish than bearish on XLV as long as we seem to have some uh, movement above the equator. What's the equator? The 200 exponential moving average, or if you're using my propulsion, the 200 prop dots. And I don't know that the 200 props is a great level to even watch it. This is a very choppy market. But if you're looking for a short, Gene, absolutely good stuff. Very, very good stuff. All right. Next up is John, I saw your question on. I'm not super familiar with the quant pivot tool. I've heard great feedback. Obviously, that's John's new tool. I don't want to make comment on something that I haven't been using for at least 6 months. But again, look, I trust John. If this is something that he knows is helping him make great decisions, enough said, right? But as far as there's no comparison to the HPMR. HPMRs are about volatility, right? So this is a really cool question in terms of what can indicators measure, right? Let's talk about this for a moment. I know we're running over a bit, but this is important. And I like the question, John. What can an indicator measure? Indicators mostly and can measure price. Most of the indicators that traders use are different ways to slice and dice open, high, low, close over a period of time. That's your majority mindset behind an indicator development. Two, the second thing would be volatility, right? HPMR, and I'm not saying in importance, just 1, 2, 3, 4. Volatility. HPMRs are based on volatility, historical volatility. They're not looking at open, high, low, close. They're looking at how many points did XLV move in terms of the typical movement of the past 6 months, historical volatility. There's a third category for indicators, and that's volume. I'm a big fan of volume. See the volume ledges here along the right side of my chart? I'm a big fan of not time or date-based volume that usually sits at the bottom of your chart. I'm interested in price-based volume, as you can see, that sits along the vertical edge of the chart. Price-based volume. So volume is another. VWAPs, V-score, volume ledges, points of control, volume profile, market profile, right? That kind of gets us into time. Can we overlay time into these indicators, right? That's a fourth input, if you will. And of course, right, whether it's a set number of periods or whether it's an anchored volume weighted average price, if it's a variable range volume profile, which is what I use. So those are the 4 factors. So that's where I would say your differentiation comes. I hope that helps, right? And, ask yourself, what do I need my indicators to tell me about one of those 4 things? And as long as you've got those 4 things covered, and whatever choices by way of indicator you make, I think you're in great shape. All right. So that's my take on it. So next up is, let's see. Thank you for all the input. I have my grab premium. How do you interpret the arrow that looks back at length? How do I interpret the arrow that looks back at the length on grab premium? Are you talking about the Darvis within that bundle? I'm sorry. You know what? If I'm not quite following the question. How do I look at the arrow and the look back length? I'm actually a little lost on that question. I apologize. Nyla, I hope I'm saying your name right. But what broker would I recommend if someone is interested in trading futures? If you're interested in trading futures, and that's an easy one. If you're interested in trading futures and you're going to do so as a swing trader, overnight positions, TradeStation's fine, Tasty's fine, Toss is fine. For specifically day trading, most of our members use Infinity because it's a very streamlined platform. It's very solid execution, and they've got very good margin. I've heard great things about Ninja. I've heard great things about Tradier or Tradeovate. Sorry, Tradeovate. I don't have any firsthand experience on those, but if you're going to be day trading, ask the broker what's their day trading margin, because one of the advantages of being a day trader is that lower margin. Infinity is what a lot of our traders in the futures room that day trade use. So I hope that helps. All right, last question. Hey there, Kim. Will the webinar be recorded? Oh gosh, if there's anything that we do, if one of us are on the mic, it is being recorded. So yes, if you can't attend live, great question. Still head on over to simplertrading.com/timeless and register, because what Daryl does back here in the office is he gets that replay out to everybody really quick. So if you can't be there live, or heck, if you did and you want to review it and you want that link sent to you, just register and we will be sure to get that out to you. Okay. Looking forward to seeing you all there. I know I've run over. Thanks as always for being a part of Charts and Coffee. Caffeinate and dominate, gang. It's a caution day, tail end of non-farm payroll. We will get that echo effect at 9:30 as stock traders can respond to the 8:30 Eastern data. Have a great one. Be good to each other. And there's a look. Oh, the look back in the grab. Oh, okay. Real quick. Nyla, 1 year for the daily. And I would say intraday, if you're looking at a 5-minute, about 2 weeks is fine. So yeah, what I would do is just set it up to, what do I want to study? So you can throw that in there. If you just want to leave it on a year for daily or even 2, that's perfectly fine. All right. Okay, gang, have a great one. I will talk with you later. Have a terrific weekend. Thanks as always for your time. Be good to each other, gang. I'll talk with you soon.